Good morning, everybody, and happy Tuesday. We are going to get started here in a couple of minutes, just about 2 minutes past the top of the hour. Like we do every morning, Monday through Thursday. Quickly adjust this. All right. Um, if you have any questions that you would like me to go through, please queue them up so that we can address them in due time. Thank you for the audio test. Appreciate it. And again, we're going to get started in just another minute or so. All right. Okay, perfect. Let's get started. Good morning, everybody. Serge Berger here from The Steady Trader. This is our Set the Market Morning Show. Monday through Thursday is what we do. And we are going to do about 10 to maybe 15 minutes of going through the top things that we are looking at here in this market. Well, as always, I'm going to have a look at my notepad. As I mentioned before, I typically have about 3 to 4 pages of notes every morning, and I try to compress that as much as possible in a few minutes. Obviously, we can't go through everything, every little detail, but we go through the stuff that we think are important. So, first of all, let's just quickly start off before we get to pound here and a couple of other stocks that I know everyone's watching very closely. Let's just quickly take it right back to the S&P 500. Again, just for perspective, let's keep in mind where we're at, meaning we still have an index that has done very little. In fact, it's actually down on the year. Both European markets and Asian markets are kicking the living daylights out of the S&P. We actually think that's something that could become a broader theme. So we are being over at the Blue Marlin Advisors, separate company. We are being very clear about maybe this being a point in time to diversify more, because if the S&P goes sideways for 5 to 10 years, and it could, then that is not going to be something that a lot of people are going to have a lot of fun with in their portfolios. And that's also why we think a lot of people are going to have a big problem in their portfolios going forward, because they're not going to do that. But that's basically where we're at. We're in a trading range. The S&P is now back to where it was on the 8th of November or so, which is like a day or two after the election. So it hasn't gone anywhere. We have NVIDIA, of course, on tap as far as earnings are concerned tomorrow after the close, tomorrow, Wednesday. So that's going to be something to watch. We briefly went over it yesterday. NVIDIA's an expected move is somewhere around like 145 on the upside, maybe a little bit less at this point, to maybe about 120 on the downside-ish. It's changed a little bit. I looked at this yesterday morning, so it's probably a little bit tighter now, but that's kind of the expected move. If NVIDIA has a move beyond that, in either direction, to the upside or the downside, it could be something bigger. I personally am not going to do anything here. Again, we don't hold trades through earnings. We know what the statistics are over the long term on that kind of a strategy, so we're not going to do that. But after earnings, let's see what happens. I do want to remind you that there are a whole bunch of stocks within within that similar space that are looking worse. Like, for example, Qualcomm on the Market Rover, which is our trend following and trend software, is actually now in a bearish trend, and it's had some bearish reversals. Now, again, tricky to put on a trade in Qualcomm ahead of NVIDIA earnings tomorrow, but just keep that in mind as we head into earnings tomorrow and NVIDIA, that this may be something to be respecting, because if Qualcomm ends up falling out of this consolidation pattern, it could be the beginning of more momentum to the downside. But again, we want to be open-minded at this point. One chart that I showed yesterday in our trade ops discussions in our trade alert and research chat rooms is this one here. This is shares of Microsoft, and if you look at that green arch, that's kind of what the Microsoft been holding on to for quite some time. If we break below that, particularly on a weekly closing basis, that might coincide with something like what I just showed you on Qualcomm as well. So there's a lot of stuff that's teetering. If you think about the month of March, and I'm going to just now quickly get rid of all this stuff and just focus on just a quick point that I want to make. So let me just quickly bring up this one point. So what I'm seeing is the market get more comfortable now with the idea that we are going to see a potentially volatile month of March. And the reason for that has to do with that we're kind of obviously going to be through earnings season, number one. Number two, we have tariffs that may, who knows, come back into focus more seriously in the month of March, starting next week potentially. And then I think we're going to start to see things kick up a bit more as far as geopolitical stuff goes. So I think we're going to get here a lot more sort of headlines around U.S., Russia, Ukraine, and then potentially with China, and that's, I guess that's more of a tariff story again. So I think there's a lot of risk here that might be coming into the market. The other thing that I am seeing when I talk to institutional investors is I'm seeing a lot of people coming to the potential conclusion, it's still early, that we may have to go through some near to intermediate term pain in order to have longer term gains. So like, for example, tariffs is one thing that falls in that category. It's going to sting, but maybe not forever, right? So these are the kinds of things that I'm seeing. And so as a result, we're starting to see people willing to take more profits on things that they otherwise wouldn't have been over the past really number of years. And if you look at some of the smartest guys out there, not to name names, but if you watch the headlines over the past, even just the past few days, we've seen people come out for the first time in a long time saying they could see, is probably the better way of saying it, a significant correction at some point this year. A significant correction by most standards is probably about 30%, right? 20% may not be enough in S&P 500 terms. Now, it's not my forecast, but I can absolutely see that. And you know how many people on the retail side are positioned for that? About zero, right? Now, obviously, some people are trading and are short and whatever, but for the most part, almost no one can even emphasize with that potential scenario. The bigger problem is if we don't have a V-shaped reversal after that, and I actually don't think we will. I think we're going to see the S&P potentially go sideways for a longer period of time, and again, most people's portfolios are not positioned that way, so that's a big problem. So that's that. Now, let me go through a couple of individual stocks, and I want to show you one common thread that I am seeing that I think is very interesting here as it relates to stocks that have been having these up gaps and are now looking to potentially close them. And this is a common thread. And again, this is because the correlation within the stock market is very high. So I'm going to go through three stocks here, and you'll see how they kind of have the same story to tell. So this is Palantir. If you're part of our trade ops chat rooms and trade alerts and everything, then you have heard me talk about since Friday very clearly that I think there's a good potential, actually since Thursday, there's a good potential that Palantir ultimately closes the entirety of its up gap from February 4th. That would get the stock down to about 80. And from yesterday's close, that would be down another 10%. That would take the entire trip from the morbidly overbought to mean reversion about 35%, which I think is at the very least par for the course. If not, it's certainly healthy, and if not desperately needed. That's Palantir, okay? Up gap after earnings, after a steep move, mean reversion. How about Pinterest? PINS. Rally into earnings. So this stock rallied about 14% into earnings, then leaped higher after earnings, 22%, and now it looks like it could start ultimately, and this is not necessarily today's business, of course, or even this week's business, but ultimately could start filling the entirety of that up gap. It's entirely possible. I don't have a trade on this to be very clear, but it's entirely possible for that to happen. And then also we'll look at something totally unrelated. It's not tech, but Oshkosh. That's defense stuff. And here too, rally into earnings, the stock goes vertical, and it could now start filling the rest of that up gap. So I'm mentioning this because it tends to rhyme when you see the equity market go risk off. The correlation of things dramatically increase. So that's what I've got to look at here. I think we are in a bit of a trading hold right now. We have NVIDIA earnings tomorrow after the close, and from a correlation perspective, that's going to be something that a lot of people will want to see what the outcome is. Again, I showed you before what the options market is kind of looking for. It's somewhere within 145 and about 120. Last I calculated yesterday. I'm going to calculate it again here in a few minutes in our Inner Circle member session that starts in about 8 minutes or so. So we'll go through it again there in more detail. But that's kind of what we saw yesterday when I went through these numbers. So if there are any questions, just give me a quick shout in here, and I'm happy to entertain any questions here. But we are going to otherwise wrap it up here and meet you back here tomorrow morning. And again, we're really waiting NVIDIA earnings. I think that actually does really matter for the broader market here. So let's keep that in mind. Do I think futures have another down day? I don't know. What I do know is that, and I don't know which futures market you're talking about, Sharon. I'm assuming you're talking equities, but I don't know based on your question. I actually I do have some futures shorts on like a multi-day, multi-week basis. That's not based on today, so I don't really know. Again, I think NVIDIA is a big moment tomorrow, so we'll have to see. But I don't think there's any reason why we can't have another down day. The NASDAQ 100 is down 2 days in a row. In fact, it's down 3 days in a row. So the NASDAQ 100 is now down. The QQQ is down 3.7% in 3 days. Once we're down 10, 15%, I think things become a bit more interesting on the upside again, but we're not there yet. So all we're doing is mean reverting right now. We're, as I said before, if you look at the SPY, for example, all we've done over the past few days, is basically get back into the middle of the trading range that we've been in now basically since right after the election. So around this, let me draw this in here. This is roughly here, the sort of the middle of the trading range that we've been in since the election. Okay. Yeah, so you always take the highest points from a mean reversion perspective. So like right now, the SPY is down 2.65% or so. You always take the highest point, of course. Yeah, absolutely. Cool. All right, folks, I'll see you guys over in the Inner Circle member session here in just a couple of minutes. We have to go through some of the opportunities in some of the country ETFs that we want to be allocated to. And then we are going to be in the trade ops chat rooms with trade alerts in about 15 minutes from now. Have a great day. We'll see you guys back here as always in the morning. Please give us a thumbs up. Please subscribe to the channel. Very important so that you get alert in real time when we go live, and also so we continue doing this show. Thanks for your help, and we'll see you guys tomorrow.